Why are digital banks the future of banking? Only a few industries have seen such rapid disruption as banks have in the last 5 years. Fintech firms really messed with the big banks. And with the ability to open and use an online banking account in minutes, digital banks were completely prepared for the pandemic, demonstrating why digital banks are the future. Despite the fact that physical brochures were essential business that were allowed to remain open in most places, few people visited them. Instead, a large number of people chose to open an online bank account. Why rub shoulders during a pandemic when you can bank while binge watching Netflix? Most digital banks will only provide essential financial services and will not provide mortgages or loans, for example. We must distinguish between digital bankings and online accounts or mobile apps launched by traditional companies. Digital banks, by definition, branchless. They also do not have thousands of employees. Now, what digital banks are, here are 6 reasons why they are the future of banking. 1. The pandemic. We're all too familiar with the terms like COVID, pandemic, and lockdowns. Many industries were taken aback when the lockdowns began to be implemented on a global scale. It was critical to adapt in weeks rather than years. Even the most hesitant had to go completely online and cashless in order to stay in business. A few years ago, challenger banks disrupted the banking industry. However, the number of users had not yet reached acceptable levels, and there is still plenty of room for growth. When the pandemic struck, many, if not most, people were either not allowed to go out or simply did not want to. Even if the social distancing measures were implemented, no one wanted to be standing in line, surrounded by people. It was much simpler to be open a digital bank account and bank as usual online. To be sure, your traditional banking has a mobile banking app. However, some of them are extremely clumsy, lack many features that neobanks readily provide, and are not at all geared towards the younger crowd. To summarize, the pandemic caused people to sign up for and use digital banks much faster and in greater numbers than usual, cementing their position as future of banking. 2. Ease of use. This is most likely the main reason you would open a digital bank account. It's so simple to download the app and create an account in a matter of minutes. Fast approval times allow you to begin banking almost immediately. Digital banks enable you to send money to friends and family members using their emails or phone numbers, as well as pay bills online and split bills among roommates. When it comes to online banking, there is no doubt that budgeting is a favorite feature. This critical feature is available in the majority of digital banks, as it should be. It's convenient to see where your money is going and which categories you're spending the most on. I mean, how are you supposed to cut back on your spending if you don't know what you're spending on? Sometimes the best motivation is to see the amounts being siphoned out of your pocket in black and white. It is much easier to save money for the things that really matter now that you can set spending limits on spending categories and turn on auto-save features. 3. Fees. Now comes the exciting part, the charges. There is where digital banks and traditional banks most differ. While traditional banks try to rip you off with a slew of fees, digital banks, on the other hand, frequently don't have any fees for everyday banking operations. The simplest way to stick it to the big banks is to open a digital banking account, which will save you money while costing the big banks money. We currently have a plethora of digital banks to choose from in the United States, Canada, the United Kingdom, the European Union, Australia, and Asia. Nubank, the world's largest digital bank, is based in South America and has over 40 million customers. So, how did digital banks generate revenue? The majority of them make most of the money from interchange fees. These are the small fees that merchants must pay to Visa and MasterCard in order to accept cards. Card companies then distribute a portion of the proceeds to banks. That is how the traditional and online-only banks make money. Nonetheless, the old guard makes a fortune from overdraft fees and credit cards, something that most mobile banks do not provide to their customers, most likely for the better. 4. Lower overheads. As previously stated, digital banks do not have branches, which are physical locations where you can walk in and speak with a bank teller or advisor about the money and bank account. Instead, all transactions must be completed via a mobile app or, in some cases, a desktop browser. If you have any issues or problems with your bank account, mobile app, or even a scam or hack, you can contact us via chat, phone, email, or the frequently asked questions section. There's nowhere to go to a branch and talk to someone in person if something is urgent and no one answers the phone on the other end. That is the disadvantage. The advantage of digital banks is that they have no overhead because they do not have branches or a large staff. These are significant savings that can and should be passed on to the customer. Even the largest banks will eventually close most of their branches and move all their operations online. 5. Technology. This is obviously significant. As technology advances year after year, so does the number of people born after the internet was already commonplace. Young people, and not just them, expect to be able to do most things online or via an app. Online shopping, dating, and even court hearings are now commonplace. So why not finance? There's no reason not to, which is why digital banks are the way of the future. As demand declines, traditional bankings will close fewer and fewer branches. Will big banks finally offer lower or no fees because of the lack of overhead? Isn't that something that digital-only banks already provide? No, most likely not. They're too set in their ways to change their minds. If traditional banks do not adapt, millennials, Gen Z, and Gen Alpha, born after 2010, will only bank with digital-only banks. Challenger banks are maturing and providing a wide range of financial products and services. Soon, there will be dozens of digital banks offering nearly everything that traditional banks and credit unions do and more. 6. Community. Some, if not most, neobanks such as Venmo have a strong sense of community. Venmo has been used by over 70 million people to receive or send money, pay bills and services, and buy cryptocurrency. When you pay someone with Venmo, you can include a message, GIF, and emoji in a social media style transaction. If you don't turn it off, the social feed is visible to everyone on the internet by default. And despite some concerns, young people who use it don't seem to be bothered by the lack of privacy. I mean, we've all been conditioned not to expect privacy online, and have, for the most part, accepted the idea that we're constantly being tracked by big tech companies. Venmo is an excellent example of how a fintech can quickly enter our lives and even enter the dictionary with Venmo me. When was the last time you had a genuine connection with your traditional bank? Perhaps there is still a sense of community in a small town where your bank teller knows your name and greets you when you bring in your check. I just hope they don't close the branch. I listed 6 reasons why neobanks, challenger banks, or whatever you want to call them, are the way of the future. Banking, money transfer, investing, and even communication are all in the future.